Hi, I'm Khleif. Each and every week, I record an interview with a thought leader that I know you're going to get a ton of value from. Now, here on YouTube are the video versions of my podcast, Lifetime Cash Flow Through Real Estate Investing. Now, to make sure you get the latest information, please subscribe and hit the notification bell. Let's get started. Welcome to another edition of How to Build Lifetime Cash Flow Through Real Estate Investing. I'm Khleif, and I am thrilled you're here, and we are in for a real treat today. We're interviewing Nathalie de Vos Burchart, and Nathalie, once she closes on what she has under contract, is going to be in over 3,500 doors. Yes, you heard me right. And it's just so rare that we get super successful multifamily investors that are female on this show. So this is just a real treat for us. Nathalie, welcome to the show.
Thank you. Thank you for that introduction.
Oh, well, it's very impressive.
Very impressive, man.
Yeah, it is very impressive.
I appreciate the invite, and I'm delighted to be here.
Awesome. So what we usually do is I have my guests kind of speak to how they got into the business, a little bit of background prior to the business, and then how they got into the business and, you know, to the success that they enjoy today. So if you could give us, expand on that bio, please.
Okay. I'll start with my formal education. I'm a chemical engineer. I find that there are a lot of engineers, IT types in the space. So I like the numbers side of things. I have an MBA as well. So I've paid my tuition in terms of the educational institutions. But I consider myself an oil and gas person by background. So really my background's business, specifically downstream, so refinery onwards, and so supply chain operations, logistics. I am also entrepreneurial, started a commodity trading company with one of my coworkers at ExxonMobil back in 2006, and built that company with this gentleman from the ground up. So that's kind of my business background, and really did that until about a year and a half ago. So very much employed full time and nose to the grindstone doing that. And I fell into real estate because I had cash distributions and liquidity coming from that activity. So that's how I've made money, was that business. Back in 2009, 2010, I didn't feel comfortable having any of that in the stock market. So it was all about buying real estate literally in my zip code in Houston here. And I just kept buying because everything looked great. So I got up to 30, I call it doors, but really that's all single family, 30 properties in a single zip code. So no geographic diversification. More or less self-managed that, not from day one, but after going through hiring and firing property management, decided to have full control and self-manage. And about, I guess it would have been 2015, when I was expecting, so pregnant with our son, decided I needed to either go bigger or do something else to scale it and turn it truly into a business, so that I would be able to balance family life, work life, and I guess real estate life. And it's at that point in time, kind of a fork in the road for me, that I started attending different events, getting more educated, and several of the events, it was a total of 5 different weekend events, but several of them were apartment specific. And my aha moment was, an apartment is a business. I was like, well, wait, I've been involved with growing a business for the last 11 years. For the last 2 years in my company, I've been buying businesses. We closed on 5 different type of assets, ranging from storage terminals to full-blown metals companies. So I've done the M&A and the type of analysis involved with those types of acquisitions. So I was like, apartments, it's kind of I don't want to say a snoozer, but it's
a no-brainer. It's a no-brainer. It absolutely
totally made sense for me. And then, having gone through knowing what single family was, and the lack of scalability with that, and the I don't want to say headaches, but there's a lot of small things involved in terms of management.
Sure. Well, let me say this, the fact that you didn't have geographic diversity with your single family is absolutely a plus. Okay. The reason I crashed and burned in 2008 was I had way too much single family diversity. You don't know my story. I didn't have, by the way, those of you listening, we met in Houston just last weekend at a one-day event that our friends, Kenny Wolf and Ferris Musa had. And we just got to talking, sat next to each other and got to talking. And that's how I was like, man, I've got to get you on the show. But, my story that you don't know is I owned 800 houses here in Florida. They were 2 hours one direction and 2 hours the other direction. I had multiple apartment complexes. And because of that geographic diversity, I crashed and burned in 2008. So, the fact that you're in the same zip code was absolutely a plus, because one of the biggest things that killed me was if we had a maintenance issue, I'd send a maintenance guy drive an hour to get there. He'd have to see what was wrong, find a Home Depot or a Lowe's, drive back and forth. And what would take an hour in an apartment took all day at a house. So, multiply that times 800, and that's why I got my butt kicked. But my multifamily did just fine through that period. So that's kind of why one of the reasons I started the podcast. So you went to these events, and I know that you started passively. So let's talk about that. You actually, you started investing passively, which is just a fantastic way to get started. A lot of my students have done that. A lot of people, start that way. Can you speak to that a little bit?
Yeah, I think it is really a great way to get started. And I'm not saying that as a syndicator either.
Right.
It's one of those, before you even go into the more active route, you want to make sure that you like the space, that it's something that you can be committed for the long term, because it is a long-term play. Mm-hmm. And for me, it was both for the capital preservation and capital growth aspect, but also educational. In other words, I sought out, some people call them sponsors, leads.
Right. Operators, KPs, general partners, they're all the same thing, right?
So I sought out folks that had a track record and that were in different markets, because with apartments, I was like, oh, because of how they're run, I can have geographic diversity, which I lacked before the single family side, and sought out experienced syndicators, leads,
right,
where I could glean and gain best practices from, see how the reporting, communication was done, and that's all things, and also have access to them.
Right.
So that's proved itself invaluable. And we were talking before we started recording this session about the things I wanted to maybe focus on. But for me as an engineer, my soft skills are not the best, and that's always been a growth area. But at the end of the day, this business is all about the people, the connections you make, and that incremental edge ends up being, I find, another person that you've interacted with. And,
no question. And I wasn't clear on what you meant by soft skills, and now I get it. It's your ability to communicate and develop relationships. And I beg to differ, by the way, on what you just said about your soft skills. And you're, in my opinion, an anomaly. A lot of engineers truly have difficulty communicating. They're very introverted. They don't enjoy it at all. And you had no issue whatsoever, at least based on my experience in Houston when I just met you. So, but you're absolutely right. And you guys have heard me say it on the show time and time again. This business is a team sport. It's your network is your net worth, and who really does matter. And you need to be out there making relationships. So here you have it from a super successful woman that speaking to that, the importance of that. So back to what you just said about identifying skilled operators, seeing how they operated, the reporting they gave you as a passive investor, and maybe the communication. Like, one of the things that we do in our syndications is I spend a lot of time educating our investors. We do regular webinars. We talk through beyond just what's happening with that specific asset. Of course, we update on the asset, but then we get into, some of the whys and some of the things that we're doing, which you just, I can't teach from stage at my live events. There's just too many little nuances. And so, it's just a great way to get the behind the scenes, have access to people like yourself and myself, and which is really sometimes very difficult to have. And then also be able to put it on your resume. So when you approach brokers and you can say, I'm in 1,000 doors or a few hundred doors. Yes. Would you agree, Nathalie?
Yeah. And it's amazing how there's a snowball effect to the whole thing where you feel like you're just getting started. And if you ask me, I am just getting started. It might sound like a lot of doors, but it's just
right.
Building on itself, which is great. And
well, the other piece, I'm sorry to interrupt. The other piece is your confidence as well. And by investing passively, you're also enhancing your competence, number one, which of course equates to confidence. Would you agree with that as well?
Totally. Yeah. Anecdotally, before, when I was buying all those single families, I did reach out and go on property tours of apartment complexes with brokers. I saw a deal not too far from me in Spring Branch. It was Allura. It was big, but I was like, I really like it. I love it. But I didn't have I just didn't have all the pieces to pull something like that off. So the knowledge was lacking. And then it was, I had too much fear and a lack of knowledge to be able to take action. That month, I regret not jumping on that opportunity. That was 2013, 2014. It would have been a great deal. Right. But there's I think you call it like a courage muscle.
Sure. That's exactly what it is. Yeah.
And it's just like working out. You've gotta be, sticking with it and building it over time. It doesn't happen overnight. And now, if I saw that deal today, I feel totally equipped to run through it,
Sure.
Offer, go back and forth, negotiate, and get it closed.
Sure. Well, I know that, you started passively, a lot of those doors, I think you said you're about half and half limited partners and general partner on those doors. And again, this is just such a great way to start as a limited partner, then become maybe a co-sponsor on a deal, and then ultimately sponsor deals. I mean, for other people that other people bring you, and that's just a natural, very organic progression. So I know that I'm pretty sure the bulk of your portfolio is Texas. It looks like you're also in Oklahoma and Arkansas, and so. Let's drill down a little bit about how you operate. So you got in passively, then you started building relationships. What was your initial target market? Where did you focus first?
So in terms of my target passive market?
No, active. Sorry. When you went active, yeah.
So I started as a passive active, if there is such a thing. And that was through partnerships and relationships, particularly two people, one of which is and still is full-time and based out of Oklahoma. And because of my lack of proximity to that, I was what our attorney, Gene Throwbridge, called more of an enhancer. But I was part of the team, but not a day-to-day asset manager, if you will. And those are the Oklahoma and Arkansas deals. And those relationships are still strong, and we still do deals together. And in terms of active, I actively look in what's called the Texas Triangle. So you're Dallas, San Antonio, Houston. I've struggled to find deals in my own backyard, but very recently, this week on Monday, closed on a 174 unit deal in San Antonio that I'm really excited about.
Love it.
That's just a couple-hour drive away, and I'm going to be intimately involved with the operations.
You live in Houston, right?
I live in Houston.
Okay. Yeah. Good. And that's where we met. I'm looking at the map and I see that triangle, and certainly very, very, very doable. And that range of geography, very absolutely doable. So, I mean, you're really blessed to have that much potential effectively in your backyard, because effectively it is your backyard. So
Texas is a great market, and between those three cities I just mentioned, they generally rank in those top ones for the job growth, population, the things you look for. in
Absolutely. Yeah, absolutely. We've got an asset, 208 doors in Dallas. We're raising equity for right now. If you're accredited, please reach out to us.
I'm gonna say, I hope it's a 506C.
It is. Yeah. By the way, guys, I couldn't have said that if it wasn't a 506C. Okay. 506C means you only deal with accredited investors. If it's, back when I first got started in this business, pretty much it was just 506B, and you had to have a relationship before you could even bring up an investment opportunity. Back then it was called the 3-touch rule. Now it's really, you just need to have a comprehensive a relationship and really have some financial understanding of the person you're dealing with. And so there's some hoops you have to go through, but because it is a 506C just to accredited investors, I can bring it up, which is incredible because that's, in the overall scheme of things, it's fairly recent. In at least in my 40-year history, it's fairly recent. So let me ask you this: starting out in this business, any aha moments come to mind for you? It was like light bulb moments where you're like, wow. Well, you mentioned one where you determined where you saw that it was really a business, which was your skill set already. You got an MBA, you bought businesses, you built businesses. So that was one. Anything else? Maybe more, well, not even more, just real estate specific.
Well, that it's a unique business, that you're not, sometimes in business, you're like, how many people do I have to hire? When do I hire them? And things like that. Whereas this is the type of business where you can leverage third-party professional property management. You can really fine-tune and dictate how you build that team and what it looks like. If I start having geographic concentration again on apartments, say in San Antonio or down the line in Houston, then I could get to a point where I could justify having property management in-house, for example.
Right.
So I love that part of it, and that there's another aspect I enjoy is being able to choose who you work with.
Yeah.
And I feel like that's a huge luxury. It's not so much an aha moment, but it's one of those things that keeps you coming.
Yeah. No, I couldn't agree more. I mean, guys, this business is not a get rich quick thing. It's a become very freaking wealthy over time thing. So as you develop relationships, realize they're going to be for decades, and focus on people you actually enjoy,
That's a big one. Life is too short for bad partnerships.
Thank you. Couldn't agree more.
Money on the table than being in a boat with somebody that will make you miserable, because it's a long ride. Yeah.
Now, who tell me, in your core team, not the brokers and the third party people, is, how do you have an infrastructure? Do you just have an assistant? Do you have someone, that does investor relations? Do you handle it all? Are you a team of one? What?
I'm still a team of one. So when I consider myself still in the infancy, that early ramping up of,
wow.
But I'm also, I won't call it control freak, but I like that level of control, particularly on the investor side, because those relationships are so valuable and so important.
Sure.
I wouldn't feel comfortable.
Sure. No, get it. Yeah, no, totally agree. They really are. Let me ask you this.
That's really my favorite part. And I want to encourage people, particularly engineers that might not feel like they're extroverted. I'm actually extremely introverted. You might disagree, that's fine. But my MBA class, we did this horseshoe formation of all of the MBA students, and there was only one gentleman more introverted than me who had worked with me on a project. And I looked at the room and I looked at the horseshoe and I'm like, shoot, I've got to push myself. So every time I'm doing this, I'm doing these videos, I have a monthly meetup, I'm pushing myself. It exhausts me, it's hard, but you do it for a reason. And you can
interesting. Interesting.
So I want to put that out there so people,
No, that's very inspiring because there are a lot of, a lot of ears of people just like that. And that was me, honestly, as well. I was terrified and hated interaction. It was exhausting for me and painful and, and fear of humiliation, fear of rejection, all of that stupid stuff that pops up. And honestly, at my live events, my 3-day live events, I shouldn't say this because this probably scares some people from actually participating, but I make people get up and meet each other. I force it because it's so critical in this business. It really is. And it's very interesting to me to hear that you downplayed your soft skills and you're the one that does all the investor relations. That's I love that. So you pushed through that fear and you just made it happen. You realized the importance of it. I love it. So let me ask you this.
That's needed, or the other component is knowing the reason why you're doing it.
Sure, it's the why. It's the why. I one of the things that I do regularly is a goal setting workshop, which is what I did at the Houston event. I did the keynote, the first keynote regarding the why and the goals and knowing exactly what it is you want and why you want it. And for most people, it's their family, and that's a beautiful thing. So a lot of my listeners are aspiring. They want to get into this business. They listen, they're encouraged, they're inspired. What words of wisdom would you give them? The people that are listening that haven't taken action yet, that know they want to do this, know they deserve more. What would you tell those people?
Get educated,
Mm-hmm.
because it's not a great feeling to see something that you want to go after. Like I mentioned, that one deal,
Mm-hmm.
and just not have the toolkit and the relationships in place to go after it.
Yeah.
Put yourself out there. We've said it so many times already, but it is about the people and the team that you build, and it's third party management, it's fellow co-sponsors, it's investors, it's a long list of folks.
Sure. Like at that Houston event, there was 3 guys that they're all in my mastermind, and they connect and they put together these events, and it's a great opportunity for them to meet potential investors, connect with other people in the industry, and it's just really how you build this thing. And I know that's intimidating for some of you guys, like it was for Natalie, but she pushed through it here and made it happen. So let me ask you this.
I've got a couple other points.
Okay, please. Please.
So one thing I feel, some people think they can come in with little money and that they'll be able to build a vast fortune. I find that's, if folks saying that can happen are somewhat dishonest. It is a business where in order to be successful, you need capital, and it shouldn't be sugar coated, because if you're starting off with very, very little, you're just not going to go very far. So capital is required. And I don't know if that's advice or not, but at least I feel like it's shooting straight.
Well, I agree. Let me just add one thing, though. Sure. Let me just add one thing, because I know successful operators that started with very little, but aligned with people that had money. So because it's a team sport. Now, of course, to be able to do that, to be able to influence someone to invest their money and put it at risk, like at-risk capital, the earnest money, the due diligence costs, the financing costs, requires a level of competence and confidence so you can influence someone to invest in your deal. But normally, yes, it absolutely requires capital, some money to get started. So thank you for that. What was the next point?
Not to rush it. In other words, I've talked to a lot of people who haven't done a deal yet, and the first one they're looking at is 241 doors in a primary market, blah, 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 blah. And I'm like,
yeah.
So good friend, and actually one of the first passive investments, one of my first passive investments was with him. He calls it climbing the rungs of a ladder. Don't try and skip them. Just go one at a time, and be patient. But you're learning things on that smaller deal, and you're better off paying your tuition. I think you call it a seminar. Yes. You're better off having your seminars early on smaller deals than crashing and burning, because you don't get another first deal.
No. If you screw up the first deal, there won't be a second deal, especially if you've got an extra 0 or 2 on there. So particularly in the multifamily space, larger multifamily space, single family, you can get away with mistakes, but the knowledge is critical. The relationships are critical. In most cases, you need some capital. Don't rush it. All great stuff. Did you have another one?
And it's one that came from my father, so that I've used in business, but I actually Googled it before I got on this this podcast, and it's what gets checked gets done, what gets rewarded gets repeated, and it's not just the first part, and it's the whole thing together, it's not my dad's quote. It's John Jones, and I believe he's a judge, or probably isn't living anymore. I didn't verify that. But essentially the importance of checking through your weekly meetings and key performance indicators and reports and financials. I feel like the financial literacy of being able to understand a balance sheet, understand a P&L is crucial. You're running a business. So verifying those things.
Understanding how to normalize.
Yeah, rewarding that performance. So we have a regional that's been outstanding on a particular deal, and the discussions are, can we send her on a cruise or so? What would she enjoy and would feel?
Love it. Great stuff. I've heard it's you said what gets checked gets trust but verified. What gets checked and measured improves. And I've heard that quote said different ways as well. And it's so true. In any business, you need those key performance indicators, those metrics that you measure by. You have to have optics on your business. In fact, I'm doing that piece right now in my thought leadership business. It's been go, working in the business. And now we're creating a dashboard, and we've got to be able to look and see what's working, what's not working. If we advertise what works, how long a client stays with us and things of that, just things that you measure. And in this multifamily business, there's a lot of those things that you work through. And then back to your, what gets, rewarded gets repeated. No question. People love that stuff. And any time you can incentivize someone, it's just it's a home run. So you look for ways like the last third-party property manager we hired. There's an incentive plan. They hit certain NOI metrics. They make more money. Yeah. And that's a big company.
That's alignment, and that's
right. Yeah, love it.
And you were saying trust but verify. I've got another one on trust, and this is learn the hard way through experiences of business interactions. Is trust is so powerful. It's such a powerful thing between team members and everything else. But when you're dealing with larger agreements and things like that, get it in writing. And this is general business advice at this point. Get it in writing and have your own legal representation. And a lot of times you feel like it might not be necessary because you trust, you know each other. It's you're going to be friends forever, but things can change.
I want to put an exclamation mark on that, guys. That quote, what she just said, get your own legal representation, is in every situation. Now you kind of subtly referenced maybe a partnership or an alignment. No question you need it there. Frankly, you also need it of course, on a real estate transaction with a PSA, with a purchase and sale agreement. Don't, if the seller has an attorney that writes the contract, by God, you better have one that reviews it. I mean, we're doing a couple of deals right now, and there's lots of redlining going on, and the back and forth and the posture and the negotiating as you're agreeing on an agreement. So you absolutely, really glad you said that, Natalie. It's so critical
real estate related. I'm working through 2 deals right now that are TIC structures, tenant and common. There you essentially have multiple borrowers and individual owners. So they should each have their own representation. It's a little burdensome. It's a little more coordination. But Makes
So
sense.
those are what, 1031 exchanges or something? You had to
Some
create.
of them are 1031 exchanges. Some of them are folks that want the ability to 1031 out. So it's not
Mm-hmm.
necessarily an in, because there's a lot that goes into that 1031
Sure.
coming in, and yeah.
Usually when I hear tickets, because somebody's either coming in with a 1031 or needs to leave with a 1031, and it's a great vehicle.
And they're usually out of California or the West Coast.
Mm-hmm. Yep. So
Yeah.
besides the quote you mentioned, any other favorite quotes that you have?
Not one that's,
Popping in your head? Okay, well, let me ask you this question, and I know I didn't prepare you for any of this, so you'll I know you'll do great. What's, as you get into this business and you start and you take off that employee hat and put on the entrepreneur hat, which means, a lot of people that are listening have W-2 income and start this, and this is a side hustle. And I've interviewed scores of people on my show, some of them that have over, 1,000 or 2,000 units that still have their core job. But what is it, but you become a leader at that point. Okay. And I really believe everybody's a leader in some capacity, but certainly as you become an entrepreneur, what's a characteristic that you think every leader should possess?
I mean, you're saying that you're a leader and you're not working, but your new boss is your investors. At least that's the way I look at it. And that's how we built our trading business. At the end, it's fierce customer service. It's all reputation. I mean, and I still look at multifamily the same way. So when it comes to decision making, if there's ever a question of, what should we do? The decision should be what's in the best interest of investors.
Yeah.
And that's, I guess, an easy one.
Yeah, that's real good.
I've experienced as a passive investor, that's not always the case.
Right.
So.
Right. Good. So listen, if you were to go back and with everything you know now, I love to ask this question. If you were to go back and tell your 20-year-old self something to possibly do this business differently, what might you tell 20-year-old Nathalie?
Oh, everybody, like including myself, I wish I would have done more sooner.
Yeah.
And I think.
Yeah. I just want my listeners to hear that, to hopefully get off the fence and go take freaking action. That's why I asked the question.
So it's action. And then to, I mean, you've got to set that as one of your goals and go out there and do it. I wish I would have met all the people I'm interacting with now when I was in my early 20s.
Yeah. Nice. Let me ask you one more thing. Tell me about a time that you got your butt kicked. You either made a big mistake or you had a seminar, a failure, not failure, but seminar that in this business.
I paid tuition. Time, money, however you want. That I call it that. It's and for the passive investors out there, it was a passive investment. But I one of the examples I've heard used, and I've basically reused it. I won't claim it as an original thought, but as multifamily is horse racing, where you've got the horse and the jockey, and a lot of people think it's all about the horse that you're betting on and the asset and its attributes, but a bad jockey can ruin a very good horse. But a good jockey can work with a mediocre horse. So for folks initially passive investing, it's knowing your jockey, knowing who's at the helm, having taking the time to have a relationship with. I'm surprised at how many people don't pick up the phone and talk to each other, or ready to just throw money at somebody. So having that relationship, and the mistake I made was having a relationship with one of them, but not knowing not knowing the person that was going to be, I guess, the boots on the ground, and ultimately was supposed to be bringing the knowledge to execute that business plan, which it was a bridge to HUD loan conversion. And one of my higher risk, higher reward type of deals. And I felt like there was also a greed component in my mind where I thought the returns were going to be good. So the risk was worth the potential reward there. And everything that could go wrong went wrong. And it started with the lesson was not knowing all the players.
Right. Okay. Oh, that's very, very solid advice.
You don't hear that often, but that particular example wasn't even a no distribution. There were no distributions. It was actually involved the loss of equity as well.
You lost capital. Yeah. Wow. That's a painful one. And I'll tell you, and I tell people, I try to, as often as possible, yes, passive investment's a great way to start, like as evidenced by you. And you still don't throw your money at someone. You come see me in Denver if you can come to my event or go to somebody else's event, but at least get a working understanding of the business. So when you see a PPM and you see somebody's pro forma, you can apply some common sense. You can see what they've done with the different line items. Does it make sense? Does their expense ratio even make any sense at all? And what have they done as far as exit strategies, and what sort of a exit cap do they have on their deal? And have they stress tested the deal to make sure it'll be okay when when things pull back, which they inevitably always do. So, so guys, if you're thinking about investing passively, for God's sakes, educate yourself, read my free book or come to one of my events, go to somebody else's. I don't care if it's me, but get educated. And, yeah, awesome. So, well, listen, you have been a real treat, and I'm really, really glad that I was able to get you on the show this quick, and looking forward to getting to know you better. And, if you want to leave my listeners with one last little tidbit of wisdom, what might that be as it relates to this business?
Put yourself out there, go out, talk to people.
Yeah. Okay. It's that simple.
Yeah, but I can't stress it enough. So
yeah, that's that simple. I mean, my students keep coming back to my events just for that component, just for the networking. It's so critical. So, it's you've got to get out there, go to the RIA meetings, you start your own RIA meeting, but get out there and make it happen. So that you're in front of a lot of people. Social media gives us such an incredible reach to be able to at least do the initial connection with people. There's really no excuse, guys. So, Nathalie, thanks so much for being on the show.
People, you'll meet even better people, and it's this virtuous cycle that builds on itself. And you're also, constantly improving. I mean, I just had last week where I found huge savings on insurance with a new provider, and been working with a national property management company that previously we weren't working with. And so we've gone through the pain and the brain damage, and it impacts the property too when you do that, of changing property management companies.
Sure. And, sure. Now we're going through that right now, actually.
With the right people just accelerates the whole process.
No question. And sometimes you have to kiss a few frogs, but you got to get started down that path. Yeah. Love it. Nathalie, thanks so much for being on the show. It was a real treat, and I'm sure we will speak again very soon.
All right. Thank you, Rod.
You bet.
Hey, thanks for watching. Please subscribe to my channel. And if you listen to podcasts, join me on iTunes, Stitcher, or wherever you listen to those podcasts. Just search for Lifetime Cash Flow through Real Estate Investing.